Hello, Richard Calhoun, Creekside Realty, 40 years of working with consumers right here in Silicon Valley. We're here today to discuss the marketplace. We'll come back to this slide in a moment. This is starting off with what I call the macro data. Macro data is San Mateo County, Santa Clara County, single-family homes, condos, and townhouses. The blue line is the available inventory. So right now we're at 80% of the inventory that you'd expect to have based on the past 5 years. And it's not actually the past 5 years. It was the last normal 5 years, so 2015 through 2019, which were all 5 good years. So when you have even less inventory than a good year, you have very little inventory. The gray line is showing the number of new listings that have come on the market just during the past week. So that the number of new listings coming on the market has basically been right about 100% of normal. The yellow line is where the median is of those 5 years. So you're getting the right number of new listings coming onto the marketplace. You don't have the right number of listings on the marketplace. And the reason for that is the red line up here is the demand. So the demand is measured by the number of new offers in the past week. And you can see that that's been running about 20% above where it should be. Recently, it's been hitting more like 35% above. For whatever reason, buyers are out there in mass. This is looking at the unsold inventory. Days of unsold inventory is the single biggest indicator because it's simply the supply-demand ratio, which in a free economy dictates what future prices are going to do. Again, the yellow line is the 5-year median. So you're normally somewhere around 39 days of unsold inventory. Keep in mind that I consider 40 to 80 days of unsold inventory a balanced marketplace. Anything under 40 is a red hot seller's marketplace. So as I was saying, the 5-year median that I'm using, 15 through 19, were 5 great years, and that's why you were at 39. This year, we're sitting here somewhere down around 22, 23 days of unsold inventory. So you have less inventory, which means you have a faster marketplace and everything is selling more rapidly. Now we flip over to the sale price to list price ratio distribution for each week. You keep in mind this is a lagging indicator because you have to negotiate the offer and you have to close the offer. So it's about 5 weeks after the actual negotiations happen. And that's why today's unsold inventory is a leading indicator as you're looking at just the number of offers in the past week. You don't have to wait for escrow to close. The current line is the purple line down here, and you can see that's just about the worst line. It's essentially tied for last week, which is sort of the orange line. And then you can see a couple of the lines like back here in March 27th are also down in this time frame. So in general, and up to the right is an improving marketplace. And the bandwidth that we've had is the blue is the worst month we ever had, which was December 2001. The red is the best month we ever had, April 2018. What basically happened this year is you went up in the improving marketplace, turned around, and you're coming back down. And so the purple is the current line. This shows appreciation. What I'm doing here is I'm taking my base number is the appreciation for the value for the entire calendar year of 2020. And then I'm comparing it to what the sale price is for the past 5 weeks as of Friday last night at midnight. So you're going back from the 13th at 11:59 p.m. back 35 days, comparing those median sale price to what it was in 2020. And you can see the yellows are sort of where I'm considering the peak of the marketplace was. So the peak sale price for the most part was right at the end of June. If it takes you 5 weeks to get that closing price, those offers were negotiated just, about the 4th week in May, which corresponds to the Friday before Memorial Day, which is typically when we have the most activity. And the typically peak price is a little bit earlier in the year than that, but the peak activity tends to be right there at the end of the May. This year, the two probably coincided. With that, we're back to the URL here in a nutshell. The green URL is what I call my root URL. You add the year to get to the live meetings this morning at Saturday mornings at 9 o'clock. To get to the handout, you use the word handout, the 8-digit year, month, date code. It is posted. I got it up about 12 minutes before the hour. And the archive is for this specific thing will be up later today, and you put in the 8-digit code. Does anyone have any questions before I slow down and do interactive in details? Not seeing anyone unmute themselves. This slide is a little more complicated now because I added last week. I kept last week and I added this week. So that way you can see whether you're improving or getting worse in any one indicator. So we're looking at what I consider to be the 3 leading indicators: days of unsold inventory, which is the best leading indicator because you don't need to wait for escrow to close. And then the frequency and magnitude of overbidding, which is the pressure the buyers felt, but it's what they felt 5 weeks ago. I wish I could get that data currently, but it's just not available because we don't report sell price until escrow closes. So if we look at single family homes in Santa Clara County, days of unsold inventory is now at 21.3. Last week it was at 22.3. So it sped up by a full day. So the market's getting more aggressive. If you look at San Mateo County, it went from 29.9 last week down to 29.1, which again is a quicker market time, quicker days of unsold inventory. So you're getting a more aggressive marketplace. In the condos, you had a split. You went from 27.2 to 23.8 in Santa Clara County. In the Bay cities in San Mateo County, you went from 22.2 to 25. So that was the one area that slowed down. I don't do all of San Mateo County only because the bulk of the condos are in this Bay City area. The second biggest area is Daly City, San Bruno area, and I think it only has about 30 properties in there. So that becomes pretty insignificant. And then the rest of San Mateo County makes up for the difference, but it's all spread out, so there's not enough. When I started doing this analysis, my goal was to have 200 properties in every one of my micro market areas. And when we had more activity, we did have that kind of volume in each micro market area. We're nowhere close now. We have some areas like Redwood Shores that never were that high. It might have used to be in the 75, and now it's down around 25. And the reason for that is the homes are somewhat not homogeneous. And so by getting a bigger sample size, the outliers don't impact the norm as much. And that's why you need a large sample size. Same concept with the frequency of overbidding. And basically you can see in Santa Clara County was unchanged from last week. In San Mateo County, it improved dramatically. And you can't compare again, you would not expect the frequency of overbidding in days of unsold inventory to go in the same direction at the same time necessarily, because to get the frequency and magnitude of overbidding, again, you need the close price. So you're 5 weeks out of sync right off the bat. DUI is also a leading indicator and indicating what prices are going to do in the future. So they're both indicators, but you don't expect them to be locked like gears and always in mesh with each other. Anyway, San Mateo County went from 78.9 to 81.4, so that improved, or at least you got to be careful because when you say improved, when you're talking about the overbidding, it improved for the sellers, but the buyers are complaining that it's crazy and insane and got worse. If you come down to condos and townhouses, you can see they're not overbidding as frequently, only at 74%. It went down to 72%. In the Bay City area condos, it went from 73% down to 68%. So the condos both slowed down. Single family improved and one was flat in another. And then the magnitude of overbidding, it's the same concept. I don't think I need to read all the different numbers, but basically you in Santa Clara County, you were flat as far as the magnitude of overbidding. In San Mateo County, you were basically flat. San Clara County condos, you basically went down a little bit. And in Bay counties, Bay condos, you went down quite a bit. This is now looking at active listings, offers, and then again back to DUI. And we keep coming back to DUI because it is the single most important indicator. We're looking at the breakdown in the different counties and the different types of properties. So over here, you have condos and townhouses on the right. Sort of in the center, you have single family homes. And on the left column, the center column is San Mateo County, right column is Santa Clara County, and the left column is them both combined. And so you basically go down here and you can see that you have less active inventories in San Mateo County single family, about the same number in Santa Clara County, basically identical in the condos. So basically there's no real change. The biggest single change was you lost about 10%, not quite 7% of your single family homes in San Mateo County. Just FYI, this 339 is what I include in my analysis. So we're losing basically 65 properties in San Mateo County. In Santa Clara County, I use every property. And in condos and townhouses, I'm losing basically 39 properties. So I'm losing a higher percentage of the condos. And it's just because you can see there's quite a bit fewer of the condos. And it gets to the point of you get garbage and there's no reason to track garbage. Then offers are looking at the past week and the past 5 weeks. If the market is completely flat, you should be able to take the 1 week data multiplied by 5 and get the 5 week data. And you can see you can do that to some degree, but here's an example where it really doesn't work. In the last week in Santa Clara County, we only sold 227 properties. If you multiply multiply that by 5, you're at 1,100. In the past 5 weeks, you got 1,300. So that would tend to suggest that the market has really slowed down in the past week. And if you look down here at DUI, past 5 weeks, the DUI is 20.7. In the past week, it's 23.7. So yes, the market has slowed down in Santa Clara County single family homes somewhat significantly, 3 days out of 20, and you probably can't get much below 9 or 10. So the real way to look at that, in my opinion, is you slowed down 3 days out of 10. But what does that mean? I don't think it means anything, because when you're at 23 days or 20, you're so far below that 40 threshold that it's still a strong seller's marketplace. I don't think even, the most perceptive person probably won't even perceive this difference between 20 and 23.7 days. I mean, it's insane at each level. And, it's the degree of insanity. Yes, the degree of insanity has gotten less, but it's still insane out there. So the yellow highlights are the ones that are more important because they're basically both counties combined. And you can see that condos and townhouses are here at 29.8 are basically at 30. Single family homes are at 22. These are a weighted average of the two. And you can see then when you weight average, put everything in a blender, you're at 24. So the overall market is very strong, with the condo townhouse market being less strong than the single family homes.
Richard?
This is just showing you
Hello.
the DUI, days of unsold inventory. Again, it's the key indicator
Hi.
over a
Hi,
longer
Richard.
period of time. This little blip up here actually happened in the data, and it isn't the real marketplace. And we'll get to a 1 week slide probably right at the end. But basically what happened is it appears that the coming soon listings ended up on the regular MLS for 2 days. And so the inventory went from 770 roughly to 930. And it was coming soon listings that really shouldn't be counted because they're really not supposed to be shown for the most part. And it's just agents trying to comply with NAR's clear cooperation. But for whatever reason, for 2 days, they were on the live database. And so my data captured that. And we'll see that at the end because it was an interesting note. It took some time to troubleshoot it and figure out what the heck went on. Here's my heat map. The redder the color, the faster the marketplace is. The benchmark again is days of unsold inventory. You can see the numbers over here on the right-hand side. The only one that is not in what I consider to be a seller's marketplace is the Menlo Park, Atherton, Portola Valley, Woodside area right there on the San Mateo County, Santa Clara County border. It's at 68 days, which is still fairly respectable, but clearly one of the slower areas. The fastest area that I'm picking up is the sort of the low affordable areas in Santa Clara County: Milpitas, North Valley, Berryessa, and Santa Teresa and Blossom Valley. This is looking at the number of active listings. Again, you'd expect the number of active listings to be up here on the yellow line, and in fact, we're only down here on the blue line. So you can see there's a shortage of active listings. And just for clarification, my active listings are listings that don't have an offer on them that are on the active MLS. And you can see that we started off the beginning of the year with actually a surplus of inventory. Then we had normal inventory. And then basically starting in week 16, we started being below the normal amount of inventory, or the inventory that you'd expect. When you see a level like this is probably sort of a strong indication of what the minimum inventory is that the valley can really sustain the activity at. And so seeing how strong the demand is, instead of expecting the number to go up like the yellow line did and then come down, I'm expecting it to sort of move along like this, basically flat, and then probably follow the yellow line down a little bit below the yellow line as we get closer to the end of the year. Just a wild prediction, but we'll see. Here's the number of new listings coming in the market every single week. You can see the yellow line is basically right on top of the blue line, shockingly mirroring the 5-year average. So it's not a lack of new inventory coming on the marketplace. And I've said that a number of times. It's the surplus demand that we're having. Here we're looking at the number of new offers accepted. This is the demand. And you can see that we started off the year with strong demand. Then basically starting around week 20, the demand went way up. Now, I believe this is going to be July the 4th. Actually, this would be July. So this is probably Labor Day, and this is July the 4th. The reason these are huge decreases is when you're looking at only 1 year, it's going to be the year that the holiday falls in. When you're looking over 5 years, the holiday moves from week to week and averages out the low spots, which is why you don't see these huge dips in the yellow. In fact, you can sort of see the July 4th was probably this week and this week in the past. And so both those weeks are down, where in the blue line, it's only down for 1 week, but it's a much sharper V. But you look at this huge amount of surplus demand. Normally you'd only expect to be selling 400 homes. That's not a lot. And that's 400 homes a week. And now you're up here somewhere probably around 530 homes. So you're selling 130 homes more than you expect to sell. That's 30% more homes. That's hard to do when you have less inventory than you normally have. Closings really don't gain us much. They're basically the offers delayed by the 5-week period of time it takes people to close escrows. This is the frequency of overbidding over time. You can see we're right up here over 80%, which is pretty amazing when you think about it. It's almost phenomenal, actually. But 8 out of 10 sellers are getting more than their asking price on a big investment like a single family home or even a condo or townhouse. This is looking at the overbidding in each one of the different areas. It's noteworthy that San Mateo County went way up right here in the last couple of days. And I don't think that's a data fluctuation because it's several data points, but it looks like about 3 data points where the other 2 data points are acting normally. So I'm going to keep an eye on that and see what happened. But there appears to have been, and it can happen, all you have to have is a more agents underpricing a listing intentionally. Then 5 weeks later, when those escrows are closing, you shift the overbidding up. But the frequency of overbidding is how common it is. So actually, that what I was explaining there was more typical of magnitude. On frequency, it's actually hard to explain a jump like that other than buyers feeling the need to really overbid. And this is the frequency overbid map. Again, the redder the color, the more frequent overbidding is. And real quickly, it looks like San Mateo North area, basically San Bruno, Daly City is the most overbidding at 91%. You got Cupertino, Sunnyvale here at 90%, and it's 90.5, so it clearly is floating finally. You got Foster City at 87, but those are all strong numbers. I mean, the weak number is, again, the San Mateo, Santa Clara County border at 59. And for 59% of the sellers to get more than their asking price, that's pretty strong. This is the magnitude overbidding. I still cannot explain this sawtooth nature. I do need to look into that just for my own curiosity. I think what I may have done is converted from the macro data, which is what it's supposed to be, which would be the lower numbers, to single family only, because single family only would be quite a bit higher than macro, and that's about the right amount of displacement. But that would be a pretty major goof on my part for doing that. But I need to go back and look at it. I had the issues of the 2 days of huge amount of inventory flooding the marketplace that I had to go chase down. Now that's what took my time this week. And this is the heat map of the overbidding magnitude. So the redder the color, the more buyers overbid. So you can see San Mateo County is pretty strong. You can see Cupertino Mountain View is pretty strong. It's sort of interesting that South County is sort of on the weak end. And I think that's just because they're not used to the overbidding. They're not used to going dramatically over. We've already talked about this slide. I brought that back up, though, for this slide. So now you're looking at just the last 12 weeks. Keep in mind the dotted lines are the oldest, the dashed lines are the next oldest, solid lines are the more recent. So if you look at this, you got dotted lines here, then you go up a little bit to the dashed lines, and then you come down a lot to the solid lines. So what you're basically doing is saying right here in the June, end of May, we weren't quite at the peak of the marketplace. But remember, that takes back 5 weeks. So that's basically saying 5 weeks before June is where the market sort of peaked, which again is that back to that infamous, famous month of May. And then by the time you got down here to the dashed lines, were basically the month of July, the market was already slowing down again. And by the time you got to the solid lines, which was basically the month of August, you're going back downhill. Now, again, keep in mind, even though you're going downhill, these are still strong numbers. So it's not like the market's crashing or anything. It's just the seasonal fluctuations. Now you're looking at the sale price. I have three different numbers over here. The number to the left is the cheapest 10% in the area. So in South County, you have 80% of the homes between 800,000 and 1.9 million. So you got a range of about 1.1 million, where 80% of the homes in South County are, and the middle point is at 1.2. So it's only 400,000 up from the low end, and it's 500,000 below the top end, almost 700,000 below the top end. So you can see it's skewed heavily to the low end, because that's just the way the pricing structure typically is. It's about 1/3 of the way up. And I think if you went through and did that math, you'd sort of see it the same of all of them being similar. We'll jump down here to Milpitas, since it was one of the hotter areas. You go from 1.1 to 1.7. So there the swing is only 600,000, and the median is up 200,000. 200,000 is 1/3 of the way up from the 600,000. So that's the kind of distribution you would sort of expect to see. And, there's nothing significant in it, but it gives you an idea of what the price ranges are. Now, what we're looking at is historical. And now we're jumping forward to the month of August. And you can't do that complete because we're still in August. I can't get August data until September the 5th. But what I'm doing for 2021, the left-handmost column, is I'm stopping last night at midnight. I'm stopping on the 13th. I gathered the data on the 14th. I looked back 35 days and I populated that as if it was the month of August. And, it's not very accurate yet, because we're only 2 weeks, and we're not even 2 weeks into August yet, and we go 5 weeks. So I have 2/5 of the data, which, 2/5 of the data is 40%. Next week, when we come back, we'll have 60% of the data. So it'll start getting a little bit more accurate. The week after that, we'll have 80%. But it sort of gives you an idea of what's going on, sort of hedging the bet. So right now we have what's on the marketplace. You have an average of 40 days on the marketplace, and you can see that that's basically a record low. Median days is 15. Again, that's a record low. So the stuff that's been on the marketplace right now has never gone off the market at this time of the year this quickly. And that's just showing you how strong the market is. You can see the lack of inventory in single family homes in Santa Clara County. We only have 770 homes. Again, that is the lowest except for 2017. And remember, I've brought 2017 up a couple times, indicating we're somewhat similar to that. And 17 was interesting because we had a second round of appreciation just about starting now through Halloween. And then we had appreciation in early 18, but by like April of 18, the market was clearly slowing down dramatically, and prices started not dropping, but they leveled off and did go down a little bit. The overshoot went away. So that may be what we're looking at. We may be looking at a little bit of a peak early next year and then a drop off. But it's way too early to tell. And all the disclaimers say you can't predict the future based on the past. What's going to happen with the Delta variant? What's going to happen with the Lambda variant? What's going to happen with the economy? What's going to happen when we have to start paying back all these incentives that the government's been handing out? We have some issues that are facing us that may impact the marketplace. That this is just more a curiosity of what the typical home is, so you have some sense. Then you get down to offers. This becomes more significant because this is what's actually going. Now here at 15 days, we're way outperforming 2017, because in 2017 it was 21 days. Median days on the market is 9 versus 11. That's pretty significant. And it's also noteworthy that it's not too much different than we were in September of 2020 or August of 2020. So, we've been at it for a year now, and we're basically where we were last August, which was in a pretty strong position. Days on unsold inventory at 21.3. It's the lowest of any time frame. Coming down to sales per day, looks like it's, that makes a lot more sense. It's 36.2. I was going to say that was like 26.2. I'm on a pretty small screen, so it's hard for me to read the numbers. Looks like it's 36.2. I can read the number down here bigger. In the last 35 days, we sold 1,266 homes, and you can see we only did 1,180 last year. In 2017 that I'm somewhat comparing it to, we were 1,131. You got to start coming all the way back to 2013, get the same order. Actually, it's an exact match. It's interesting, 1,266. And then you have to come back to 2011 to beat it. And that's significant because in general, the number of transactions, even though the population and the number of units available to sell have been increasing year after year, the number of transactions that we sell in a given year has been going down over time. Then you have the square footage to keep track of, and then overbidding at 108.8%. That is not a record, an all-time record. But if you look at back here, and that's the purpose of the table, it is an all-time record for essentially what I'm sort of portraying as somewhat a month of August. Now, I would expect these numbers to go down a little bit because typically the market's cooling a little bit as we get more and more August data, but it's the best I can have for right now. I could delete the data in July and get a more accurate number, but that's extra work and I don't think it's worth it. With 2 weeks, I'm not sure you get very stable data, so I've made the decision to stick with 5 weeks and just move it through and see what happens. And here's your sale price. And of course, that's an all-time record high for this time of the year because year over year, we've gone up quite a bit. We've gone from 880,000 to 100 to $1 million. So basically at the lowest end, the cheapest homes have gone up. I think that works out to be about 12%. You went up 120,000 on an $800,000 basis. So that's about seven. Yeah, it's about seven. Yeah, it's going to be 7 into 100, which is about 13%. Your median price went up 195,000 and your top end went up basically 400,000. And then you have the number of closings at 35, and that is an all-time record in recent past. I'm sure if we come all the way back here in 2005, we had higher sales, and we probably had higher sales back in 1999 that I don't track. And then this is frozen in time. This is the July data, so you can go back and see where we were in July. I did not get time to update these numbers, but I'll start updating those hopefully next week. And with that, I think I'm all done. I'm open for any questions. All right, no questions. Everyone have a nice weekend.
Thank you, Richard. No, I just wanted to say thank you.
Oh, you're more than welcome. I saw your microphone going, but wasn't hearing the speaker, so I must have had my volume down. I hope you weren't trying to talk to me during the presentation.
Oh, no, let's wait till next week.
Yep. All right.
Okay, have a good week.
Thank you. Bye-bye.
Bye-bye.
Yeah, bye.